Let's get in a view on IT Pack. They'll be the first to declare numbers. Rahul Jain, Vice President Research at Systematix Research and Stocks, now joins us. Rahul, good morning. What do you expect in terms of Q3 numbers to look like? Will they continue to be subdued the way they have been in the last 2-3 quarters?
Yeah, hi, good morning, Pankaj. Basically, this quarter, which is the third Q, is also seasonally the weakest quarter for IT services because of the holiday season you see in the Western market, and that's why it has the least number of working days. So that is one impact which is as part of the seasonality. Apart from that, as you said, there is definitely problem in terms of weak ramp up and even in case of some project cancellation and some insourcing. So there is a mixed blend of negative which are part of the structure, plus you have this seasonality factor which you would see in this quarter. So we at best are expecting 0 to 2% kind of organic QOQ growth for our coverage universe for the quarter.
Right. Let's start with Infosys. What do you look at Infosys when they declare numbers?
So Infosys problem is quite known in the market in terms of the RBS deal, which would ramp down in this quarter onwards. So any impact of around 1.5% is what is expected because of that. So we are anticipating a decline in the reported top line by around 0.5% for Infosys, and the bottom line impact could be negative 3% on a QOQ basis and flat on a YOY basis.
What do you eye out from the commentary? Do you think that if the numbers are weak and the numbers still need a reset on the downside, markets would not look at any commentary even though it can be positive for FY18?
I think FY18 commentary would not be positive at this juncture because of the whatever news flow is coming, whatever the commentary has even come from Vishal Sikka in some of the conferences and events which he has attended very recently. So there is no major positive that can come from a structural environment perspective. The positive could be in terms of whatever new deal addition they would have added during the quarter and whatever the client commentary they have given, which would be qualitative in nature. So this could be the smaller positive one may expect in the result. No major, revival kind of a commentary that can come.
As far as, any names are concerned, something like a Tech Mahindra you think can do better versus the sector, or a HCL Tech which has been doing better versus the sector?
So I think HCL has been doing that for quite some time because of their heavy ratio of business coming from IMS, which is still doing better versus the other traditional services, and that constituting around 45% of the top line. So HCL would continue to do better from a top 4, top 5 kind of a performance perspective that should sustain. But given the valuation, the comfort on the upside would be not very different what you may have with other large names as well.
Right. As far as management commentary is concerned, do you expect digital to now be one of the big investment area? It has been, but do you expect that to happen? And something for a TCS, something like TCS, can India slow down into India business can impact their revenues or at least the revenue growth in a big way?
In fact, given what they said in the last quarter commentary, there would be some positive that may come from the India side of business for TCS because there was some under-reporting in the previous quarter. There was some slip over of milestone. So that should not be a disappointment. As far as on the digital side of the business is concerned, I think that is one data which most of the analysts like us are looking from the company. If they start reporting their digital revenue and the kind of growth they are witnessing in that, I think that is something everybody would like to monitor. TCS has been sharing that data for over 4 or 5 quarters now, but we would like other large cap also start sharing that data far more in detail.
Do you think that markets already know about the weak numbers? That's why weak numbers is already factored in, or do you think that valuations can correct further from here on?
I think weakness in the performance has been known for last couple of months. So there is no fresh round of disappointment that can come in this quarter unless there is one-off cases in particular thing like what we saw in Infosys 6 months back or maybe Mindtree 2 quarters back. So there could be one-off client slippage or any challenge that may come, but sectoral pain are known and are in the valuation. What is comforting at the moment is that on a relative basis, post the demonetization, there are investors who are looking at IT as an investment zone, given that there is steady state of cash flows, and this uncertainty on the growth would be maybe in a short term, but in medium to long term, things may again start looking better than what it is right now.
And in terms of valuation, unless there are EPS cuts, it's very unlikely that valuations may fall from here on.
Yeah, I think valuations are very, very comfortable. These kind of valuation are accounting for a very small growth which is there right now. Unless there is a major margin slippage in particular case, valuations are very, very in a comfort zone.
In terms of mid-cap IT, there has been a run-up. Do you think mid-cap IT valuations are now not that attractive versus the large cap, or growth chances in mid-cap stocks are more and that's why market is pricing that?
I don't think mid-cap has done well. It may be just like from their bottom to where they are today. But maybe from 6 month or 1 year perspective, there are not many mid-cap which have done better than or on a total basis. I would say mid-cap are a little different play because they may be a far more agile setup. Their revenue base are small. Their growing businesses component is bigger because they are in a newer technologies. So those cases, one-off here or there may do better, and people may like to put their investment in those. But one has to be very, very selective because there, the pain in case of a sluggishness over a period of time takes a higher beating in terms of profitability. So one has to be very careful on the mid-cap they choose.
Are clients asking you that how should one play the digital story in the listed space? Have you done any work, any of the mid-cap, small-cap companies which have more leverage towards digital?
I think the popular 20 names which people are invested as far as institutions are concerned, I think there are not many varied play as far as the digital is concerned. Persistent has been one which can be easily identified. Others, most of them work on a very similar replica business model with smaller niches for other mid-caps. So yes, we do suggest people do inquire about those kind of things which can outperform in this kind of a market, and we believe the software side or maybe some smaller services companies can do better because their factor of growth would be beyond the industry factor and could be because of some positive that they have from an offering perspective or any other factors.
Right. Rahul, recently, we heard about another top-level exit in Infosys and a large severance package being paid there. So some people are raising a lot of question marks on these exits coming in from Infosys, saying that Infosys should disclose the reason for the exits at the top level. What do you make of all of this, especially since they are giving a severance? It will impact shareholders.
Yeah, I think the senior level exits at Infosys has been far more wider than what was initially thought, and there is a very, very new team that we see versus what it was just 2 years back. So yes, there are plus and minus for both the factor. I think the kind of new leadership, new thought leadership that Mr. Vishal Sikka has played in the company, he would have definitely a different strategy and mindset to drive the next leg of growth for Infosys, and for which he has chosen a different set of leaders to run this. I think we should give some more time for him to justify these changes and then take a call on whether this is good or bad.
No, I'm not saying good or bad, but what I want to understand for corporate governance, for the understanding of the shareholders, should they disclose the reason why such a decision was taken?
This could be debated, but some of the senior level exit on non-performance are not very well articulated. Some of them have been worked very, very long in Infosys. No company would like to put that such senior people are being asked to leave because of their non-performance or other factors. So I think some of these things are kept undisclosed for reasons in best interest of the people involved. But right. Yes, it could be debated.
Rahul, do you think that there could be an increase in legal expenses as well as visa expenses for these IT companies, Indian IT companies that have a large presence in North America? How would you view the new dispensation taking over in the US?
I think all the companies who are working in US are aware of this situation and are taking their own way of course correction. Some of them have already taken it. Some of them have already crossed the 50% threshold of local hiring to be compliant of any other such visa regulation challenges. Others are acquiring companies in US to get to that 50% mark, and others are trying to work on various model of hiring incrementally on that. So I think everybody understands their situation and started working on it. There are no very clear candidate who would be in a bigger issues. There could be some 1 or 2% cost impact in 1 or 2 cases where they are not able to comply at the right time if there are major changes. But I think that is more of a hygiene stuff and no major concern that would create a demand side or supply side issue.
Do you think that IT as a pack in 2017 could do very well just because of the expectation which are very, very low? They may not be big growth drivers, but at least expectations can reset on the higher side as well?
Yeah, IT has this tendency of coming back pretty sharply. We saw this in 2009 also. They were the first one who went down in terms of their growth performance pre-crisis, and there was a lot of pent-up demand that was created, which led to a strong performance in calendar 9 onwards. So I think it can happen, but given the data that is available, given the commentary, given the client perception, I think that surprise is at least a couple of quarters away from us.
What would be your top picks in the sector?
We are having among the top large names, we continue to like TCS for its execution excellence. Also, we like mid-cap stock ideas like Emphasis and OFSS. And among the smaller names, we like SQS, Quick Heal. These are some of the names which we like.
Right. Mr. Jain, thank you so much for taking out time for us. Hope to see you again once we have Infosys and some of the other large cap companies declaring their numbers next week.